Welcome to the SIP, the Solstice Innovations podcast. In each episode, we chat with industry experts and innovators in insurance and insurtech. Join us for insights on trends, technologies, and the stories driving our industry forward. Let's sip on knowledge together at the SIP. Hi, this is John Umstead with Solstice Innovations. On this episode of the SIP, our guest is Patrick Sullivan, VP of Industry Relations and Compliance at Assurant. This is a two-part episode of the SIP. In part one, we talk primarily about flood insurance. In part two, we expand the conversation to include risk management in general. Hope you enjoy. Hey, let's continue to push on the whole topic of just risk in general around the narrative of flood insurance. We'll push on that broader risk and also provide you with an opportunity to talk a little bit about assurance. So, market volatility, cat exposure, affordability pressures, all of these things and more are kind of reshaping property insurance. So how is Assurant, how are you helping clients navigate through these dynamics and ensuring that they have a positive customer experience?
Good question. Thanks for asking. We've had a lot of requests. I'll speak first for the mortgage servicing sort of aspects of Assurance business, and we've had a lot of requests from our mortgage servicer partners on helping them understand the market. And we've really done. I'll highlight three things we know. First, greater insurance insights, greater insight into their data at a portfolio level. And then secondly, what we've always done, one of our strengths at Assurant is monitoring the legislation changes and the market activity. And then thirdly, specific data-driven exercises that are underway that we're supporting. So first, the insurance insight piece. We're helping our servicer partners understand their risk within their servicing portfolio. So we've looked at changes in coverage. We've looked for trends in premium increases. We've looked for the shift, how many policies are changing year over year. When the policy changes, does the coverage amount go up or down? A lot of the insurance questions are specific to condo. Again, condo laws vary by state. Condo markets vary widely by state, especially for flood. Condo flood in Florida is a completely different market than condo flood in Rocky Mountain states. Different type of flooding, different type of risk, different inherent fundamental laws within whether walls in coverage is or isn't mandated at the association level. And so understanding just the lay of the land, what's in place, average premium, again, sort of zip code trends, that type of thing. And the big takeaway there has been that where there are pieces of data that are significant, we see it at a very, very sub-regional level. Really no one national trend. And that's the big takeaway, that is insurance activity, availability of affordability concerns really are pretty unique to submarkets. The second thing, monitoring the legislation and the market activity, really trying to help our clients understand all the changes. It's a very dynamic market, very dynamic sphere, as you know. So monitoring the California Fair Plan, the changes in Louisiana, Florida had all those reforms that they passed in the special session. We're starting to see the impact of that. The Connecticut flood disclosure last year, New York, the limits on flood coverage. So we got involved actually through NFA as well to try to get details from the governor's office, from the administration in New York relative to the limits on flood coverage. And so we're always actively working with stakeholders and policymakers to try to understand what the compliance obligations are and how that world is changing. And then we're supporting a data-driven exercise with the GSEs. So Fannie and Freddie are looking at loan level insurance data. They're trying to gather data and do analysis that will help drive policy making on a go forward basis. And so we've provided a lot of feedback and we're supporting that data exercise. So those are the three areas where we're really, really working, again, trying to support the industry.
So I think it's fair to say you're certainly not a passive participant in the industry.
You can't be. And it floods a community. It really is. And, again, working with you for all these years, working with all the NFA partners, you think about all the touch points in the flood process. You've got the mapping companies, mitigation, you've got the digitization of the maps, you've got the lending community, the local floodplain managers. The NFI has got that mitigation and that mapping component as well as the insurance component. Private carriers don't have mitigation and mapping. They do, but it takes the shape of other vendors and third parties. It's not part of their program like it is with the NFIP. And so, yeah, we're always part of that community, and we're in.
Yeah, in for a penny, in for a pound, right? So, all right. Well, hey, Patrick, I think, most of us can agree, certainly you and I agree, that, we would love to be able to move away from the sort of that mandatory mindset and make things like flood insurance more of a consumer choice than something they only do when they have to do it. But let's talk about that when it is a mandatory requirement. So around compliance, that compliance requirements, they can feel kind of rigid. So, let's empathize with the policyholder who, in this case, is the borrower, the person going out for that loan. We want them to know that the underlying goal is protection. How do you balance that regulatory compliance with flexibility and fairness for borrowers when it can feel kind of rigid at times?
Yeah, so this is where we queue up the why do I need flood coverage on the 12th floor of my condo complaint letter.
Yeah.
And lenders have had to explain in that one for years, which is not always the easiest explanation. And then you have to go through the NFIP co-insurance calculation on a per unit basis. But in terms of the fairness and flexibility, I'm gonna tip my hat to the congressional authors on the flood insurance reform 2012 2014 here. Because I think they set this, I don't want to set the standard, but they're certainly in front and acknowledged that there is a consumer impact. So Biggert Waters passed in 2012. There were some unintended consequences. There was the glide path. There were other aspects of that legislation that were clearly aimed. The intent was, let's be fair and flexible for consumers. And actually, that's where the monthly pay that's just now getting implemented, but that's where it first came up. The NFIP monthly pay option was 2012. So then you immediately had 2 years later, you had the 2014 legislation, which helped fix some of those unintended consequences. So in that one, interestingly enough, was worded Homeowners Flood Insurance Affordability Act, right? So they actually even put affordability in the name of the legislation. And so I think that points to, stakeholders here and the policymakers, people want to get it right. No one's waking up saying, "Oh, let's be mean to consumers," right? And so we're all trying to get this right. And so when you look at what carriers and the WIOs can do and what lenders can do, they can do their part as well. So we've got the Office of the Flood Insurance Advocate now. Lenders are looking at ways to smooth escrow payments from an affordability standpoint. The next flood insurance reform legislation will be, the lead debate will be affordability and how that structured and how that piece gets delivered to consumers. So nobody, that's going to be issue one on the next reform. So I think the compliance obligations are there, and I think everybody understands that the threat of civil money penalties, nobody misinterprets what that means, but the consumer fairness and flexibility has always been there. And I think that's unique in the debate, how bipartisan the debate can be at times relative to, at the end of the day, the important part of policyholder is holder. It's a person. And I think everybody in the value chain understands that.
And you make a great point in that, flood insurance is one of those things that doesn't happen to be partisan. It's a concern across both aisles and in both houses. All right. So let's talk about technology a little bit and how it comes into play into all of this. So what role do things like data, automation, integration, even AI play in creating a more seamless property insurance lifecycle from origination to claims?
We talked about it earlier, right? That flood workflow is more complicated. The friction points, right? All these things. It's the flood workflow doesn't exist without technology. So we have an existing level that it today that's good. And the question is, how do you make that better? And then fundamentally, how can we smooth some of those touch points? How can we change the workflow to bring some of those answers or some of that analysis up earlier in the process, so it doesn't have to go through 3 steps. Maybe it can go through 2. And so the maps are increasingly reliant on technology. LiDAR technology, you can map quicker, you can update maps quicker now with technology. The digitization of those maps is far more advanced. The flood zone determination companies do a great job updating their files, trying to make those determinations easier and faster. And the flood zone dispute process with lenders all becoming much more automated. FEMA, even with Loma Lomar, there's a platform for that, and the submission process is supported with pretty good technology. Lending all occurs on a platform. The closing and investor piece, the submission to the investor, that's all on platforms. You got aggregators, like we talked about earlier, building bridges where they don't exist. Verification of coverage is done electronically. The policies fulfilled digitally. Mortgage servicers are doing we're doing the tracking, but that's all. The digital life of loan is all digital. So the technology piece, again, is kind of there. AI, I don't know. I'm still waiting to see how that will be applied in the flood space, where flood and insurance are not always the first adopters, because of the compliance obligations, because of the need to test, because of the need to get everything exactly correct. We're not the first penguin off the ice shelf. We'll wait and see if everybody pops back up and swims, and then we'll jump in. So the AI might be a little ways out.
You mentioned, catching things earlier in the process, and a phrase that I've come to appreciate over the last year is shift left. Whether you're talking about development and implementation of technology, or the processing of claims, or anything in between, or outside of those 2 boundaries, shift left. Get as much upfront as you possibly can. And so I like that. I like that phrase, that terminology.
Yeah, I like that too.
Hey, before we wind some things down here, Patrick, I'd like to just ask if there's anything. We've covered a lot of ground. Is there anything that we've missed that you really want to talk about that we haven't yet? And then I have one follow-up question for you after that.
Yeah. So from a technology standpoint, I'll mention one other thing. Shameless plug for Assurant, right? Where's the bell? But HOI verified origination. So homeowner insurance verification, it can be problematic for loan servicers and lenders, right? They're needing that proof of insurance at closing or shortly thereafter, certainly with submission to the master servicer or the investor involved. So we've developed HOI verified origination, where we can link via API directly with carriers, and we've got it on the hazard side where we piloted, and that was the primary purpose. But we've now built that in the flood space as well, and so we're able to get that electronic verification of insurance and deliver to the lender. A little bit. One more thing I mentioned, but again, along the lines of how are we all connecting? How are we trying to, shrink the process, if you will, make that workflow a little easier, make those bridges between the stakeholders much more seamless, easier to navigate. And so that's one of the technologies that we've recently brought to the market that I would highlight.
Let's close things out with one final question for you, Patrick. So if you could shift just one industry mindset about property insurance and risk management, what would it be?
I would shift it. It's a 1.5 mindset, because it's not just how you measure the risk. It would be how you measure the risk and then what you do about it. And we talked earlier, we need to get away from this concept that flood risk is in or out, or yes or no on a map, and think about that risk as being a gradient. Every risk management professional out there, every single one of them, is going to tell you that flood risk is not a fixed line on a map. And even if it was, the water doesn't know how to read the map. And so we need to get the homeowners and all those stakeholders, everybody in that chain, to understand adopting additional technologies, additional tools on top of the map is just that's the practical solution here. And we're not talking about abandoning the maps. I'm not bashing them. The maps are great. Maps are an absolutely essential tool, and they always will be. But the primary purpose of that tool is, again, stormwater management, community involvement. It's an enforcement mechanism for mandatory purchase. It wasn't meant to be a tool for consumers to consider, what could my ultimate risk here be? It's a filter, if you will, for, do you have risk, yes or no? Clear risk, yes or no. And so that unclear risk, that, well, you might, that's the second part of that's the other half of the mindset question I'd love to change is, okay, well, I might not be exposed to total loss here. Let's look at the flooding, two different examples. We already talked about Harvey, very flat, Houston area, not overly hilly, near coastal, and that flood water was low and slow, and it stayed for days. And then you look at Helene in Western North Carolina, hilly terrain, riverine flooding, absolutely turbulent, violent water at times. So but historically, both of those are floods, but they're completely different types of floods, and the risk solution needed, the risk options, why people in outside the special flood hazard area in Houston, maybe they don't need full hazard coverage. They don't. They've got a $400,000 home. Maybe they're only going to be subject to about $150,000 worth of flood damage at one point in time, right? Just based on topography and the nature of the flooding and whatnot. And so, what can the private market do? What can we do? And even NFIP? What can we do to change that mindset around measuring the type of flooding that you're exposed to, and then having options for choosing different levels of coverage and different types of coverage applicable to or commensurate with that risk. So that would be the mindset I'd love to change, is to get more detailed about how we measure and how we solve for flood risk.
Yeah, what can we do? Indeed, there are a lot of great minds from all sorts of different trades that have concern with all of this, with risk management in general. So yeah, we've got a lot of work to do over the next few years. All right. Well, Patrick Sullivan with Assurant, I greatly appreciate you taking time to be on the SIP. It's been a great conversation, and thanks very much.
Well, I thank you for having me and really appreciate the opportunity. So thank you.